What's going on, everyone? It's your boy Moo Trades, and if you guys are looking for a video on how to just stop these losing trades that you're having, these emotional trades that you're having, I'm gonna be honest with you guys. The number one way to stop revenge trading or stop taking trades that you know you shouldn't be taking is just by studying these charts, becoming a better chart reader. So that's exactly what we're going to do in today's video. It is Sunday, August 6th, and this is what I do every single day. So Sunday night, I'm just going to go over Friday's price action. It's a blank chart right now, and I'm just going to replay exactly what happened, and I'm going to take you guys through the process on how I analyze trades and what I'm thinking about and really how I spot high probability trades. So right now we're about an hour before market open, and at this point we can clearly see that in the overnight session we've just been ranging. There's no clear direction, no clear bias, and I'm just gonna wait till market open and then reassess. But as of now, we might as well just draw a trading range because that's what it looks like to me right now. So I'm expecting prices to potentially reach the high of the day. We might as well draw a trend channel there. It looks like a nice spike channel, and we're just really going sideways. Looks like we even have a mini range forming right there, and market is about to open. So when I see this sideways movement, it's just a no trade zone. You really only need a couple good trades every single day to be profitable. This is a long run game, and the number one way to make it successful in the long run is just to stick to your rules and have a set of rules and principles that you follow and don't break them under really any circumstances. So once again, looks like we have a nice short-term trend. So to me, it really looks like one leg up, sideways movement, another leg up, and we're getting to the highs of the day. So it might be time to start looking for prices to actually go down at the moment. Even though we've been trending higher, it looks like there is some hesitation, some resistance at this area. So if we trade below the EMA, I'm going to look to go short. But if we're proven otherwise and we keep going higher, then I'm going to switch gears and look for long entry. So we push below the EMA. If we were going to reverse, it would be expected that when we test the EMA again, we'd continue working lower. But what happens? Instead of working lower, we keep going higher and we make a new high of the day. So now at this point, I'm like, okay, we went higher, but now we're getting rejected again. So it might just be another little fake out. And now we've significantly moved below the EMA. I'm going to draw another short-term trend. So until we get a real test at this low of this trend, I'm not going to look to go long. And we did make that low because the rules with trends are that once there's a break and a new low, only then can we really start looking for potential reversals. And it looks like we kept going lower and lower and lower. Unfortunately, there was no real high probability setup to take because I like to wait for a pullback at the EMA. So we might be able to get one here. Let's see what happens. I widened the trend channel because it looks like it fits pretty nicely. If we get a two-legged pullback at the EMA, I'm going to take that, but instead we rocketed above the EMA, so it might be time to start looking to go long. But let's zoom out. We didn't quite reach a new low of the day. We barely made it past the midway point of what we have drawn as the range. So I'm still leaning short, but we're above the EMA. So maybe if we trade back below the EMA with a nice bearish signal bar, it might give us a reason to go short. But really right now, there's no clear direction, but this is an interesting spot. So let's say we get rid of this trend channel, and in real time, I'm always looking for two legs in these markets. So if this is one leg and we have another leg there, it really might just be one leg down, break, two legs down, and we could be reversing because here we have a two-legged pullback as well. So here we have one leg up, two legs up. We can use an arrow, two legs up. visually, it doesn't have to be perfect, but you learn to spot these legs in the market. So really, if you're just looking at plain sight, it looks like one leg up, break, two legs up, break. And instead of continuing working lower, we pushed back above the EMA. We have a second entry long. So we have a new high here. We went down. We had one attempt to go lower. We pushed up, came back, tested the EMA. If this bar was very bullish, I would take it. For my own rules, I stay away from these doji looking bars. But if I remember correctly, I think this trade did end up working for a great trade. And here's the really, really nice high probability setup, because we had another failed second entry short with a nice bullish signal bar. It is a little bit away from the EMA, but you can clearly see it even looks like another visual one leg up, two legs up. That might be the actual two-legged pullback that we're looking for. One leg here, two legs, came back to test the EMA. Nice bullish signal bar, on top of the fact that we have new low here. We went up. It's a first entry short. We went up again. Second entry short, failure. It's a nice trap trade. Nice signal bar. And that looks like the high probability trade to take. If you didn't take this trade, this is the trade you want to take. And it worked out for a nice scalp. So now we're expecting to honestly just keep going higher and higher until we're proven otherwise, until we really break below the EMA. Here we have some congestion, so we might as well draw a range. We like to fade the breakouts of the range. In this case, we have a bullish or bearish signal bar near the highs of the day where we had resistance before, but you'd be going short right into the EMA after such a significant move up. There might even be a wider channel at play. We don't know just yet. Sometimes the wide channels can honestly lead to more harm than good. So I'm going to keep it blank for now. I'm really just playing this range. And we ended up breaking out at the top. It would be risky to go long or short in this situation. So I'm not really interested in going short or long. Like I said, you might be tempted to draw a sort of channel like this where you have another first entry long, second entry long, bullish signal bar, but in the long run, which we're interested in, this really just looks like such sideways movement. I would stay away from any of these trades. And we finally ended up breaking out, but I strongly recommend just not even trading this. If you have the patience, just recognize that what's going on here is that the market really doesn't know what's going to happen. So at this point, we're conflicted because we had a strong leg up and we're at the top of the range. So we could be expected to then go back to the bottom of the range because there's all this selling pressure at these levels. But also, we've had such a significant move up where if you're going short, just picking a top, you could get trapped. But like I said, in the long run, it's just best to stay away from these areas unless you see a clear sign that it's an obvious trade to take. I definitely wouldn't force anything. So once again, we're still just really looking sideways. Don't see anything too enticing. Sometimes you don't get too many trades in a trading day. And it's okay, because if you are in this for the long run and you're not just trying to make a quick dollar, you have to just wait through these days and eventually the nice trades will come to you. So here we have another interesting spot. We have one leg down, two legs down, but then we have another attempt to go short. So it could be a continuation of this sort of recent downward price movement. And what happens? It ended up going for a lot more. And you could have got a great runner here. I actually did take this trade myself. It's a new low here, one attempt to go long, first entry short. We went up again, second entry short, beautiful bearish signal bar at the EMA. That's the trade you want to take. It's about 4 hours after market open, but all you need is a couple good trades, maybe one good trade a day. If you're patient, and you could have got this Very, very nice runner. Took off. And now you're just really hoping to reach the lows of the day, because even though we did trade above the trading range, now that we're back inside of it, we're definitely just expecting to go to the lows, and we just want to have another short opportunity, hopefully a pullback at the EMA to let us go short, pile onto our position. If you're an experienced trader, you can take this trade, because at this point, you can just see that when you have such a significant move like this, first of all, you don't want to go against the trend. We still have room to the low of the day, a lot of room to the low of the day. This just looks like another trap. It would be going short in the bottom of this sort of mini range, but it is worth it, because in real time, this was getting to be I guess volatile is the right word, but really this would just be a trade to capitalize on the significant movement in the market, because we were picking up in volume at this time. And if you're experienced, you just know sometimes you got to go with the trend, you got to go with the momentum trade, and this was really just a momentum trade right there, a lower high confirmation that there's no reason to really buy at this point at all. We're getting close to market close. Here's another second entry short, one leg up, first entry short, mini leg up, second entry short, nice bearish bar. Once again, if you were trading live, you know that the momentum was clearly working down. Nice entry right there. Take that all day. And that's really all you needed for the day. I mean, those were 3-4 excellent trades. Let's recap what we saw. Okay. Beginning of the day, you had this higher low, second entry long. We didn't quite reach the lows of the day, so it would have been a more risky trade to take, but you had this confirmation, higher low, another failed second entry short trap trade right there. We reached the highs of the day, broke out the top of the range when we traded back below into the range with such vigor, such quick movement. Those are all the reasons you need to really take this nice second entry short at the EMA. Great signal bar. Once again, this lower high just confirming the selling pressure. Once again, another second entry short. See if we can get another second entry short. You have one right here. New low, first entry short, second entry short, but the signal bar is not great. And we're reaching the end of the trading day. Don't see anything too enticing. And it's because the people in the markets, they already made their money. They're already packing up, ready for the weekend. That's going to wrap up the video as well. If you guys want to capitalize on using a prop firm, Apex Trader Funding is offering 90% off right now. The deal is not going to last many more days, so cash in while you can. You got my discount code in the description. If you want to use a trade copier to trade multiple accounts, that's also in the description. Let me know if you guys like this video. If you have any questions, leave a comment. I'll get back to you within minutes usually. So have a good one. Peace out, guys.